Salam, everybody. This is Investor Shake back at it again with another video. And today's halal stock pick of the week is, you guessed it, Under Armour. Ticker symbol UA for the Class C shares and UAA for the Class A shares. So for the Class A shares, stock price is currently at $23.38. So Under Armour is another sports apparel company. Last week I talked about Nike, which is the top dog in athletic apparel and shoes, but Under Armour is basically its little cousin that sells basically the same thing but with a different brand, and is taking up a smaller share of the market share of athletic wear. So the stock price is at $23.38, and some key stats are: it has a $9.8 billion market cap. It does not pay a dividend. The 52-week low is $7.15, and the high is $24.39. So the current stock price is a lot closer to the 52-week high. The PE ratio is negative 17.84, and earnings per share is $1.21. So a description of Under Armour is: Under Armour is a leading inventor, marketer, and distributor of branded athletic performance apparel, footwear, and accessories. Designed to empower human performance, Under Armour's innovative products and experiences are engineered to make athletes better. So looking at the full report of Under Armour. By the way, this feature is only available in the paid version of Zoya. You won't get this compliance report using the free version. So looking at Under Armour, almost 100% of its revenue is compliant. So if you to break it down, they say 0.36% of it is questionable, but that's a very negligible percentage if you ask me. It's not that big of a deal to determine, to question whether or not it's Sharia compliant, considering that 99.64% is compliant based on the 10K that Under Armour provided. And then looking at the financial screen, it does pass according to Zoya's standards. They do have debt at 25%, but on the Zoya app, anything below debt that generates interest should not exceed 30% of its market cap. So basically, any companies that whose debts exceed 30% of their market cap would deem it not Sharia compliant. So as long as they don't have too much debt and it is at a manageable level, we would still consider it Sharia compliant. And then 19.57% of its market cap consists of interest-bearing securities. So of course, they do provide calculations. So for the interest-bearing debt, it's based on the total debt divided by the market cap. And then the interest-bearing securities is determined by adding the cash and cash equivalents and deposits and dividing that sum by the market cap. So this is the math that they do to give these percentages, and as long as they are below 30% of the market cap, it's good to go. So that's something to keep in mind, whether you want to calculate the numbers yourself or utilize the compliance report on the paid version of Zoya. So again, the stock price is currently at near the all-time high, the 52-week high. So in a way, you kind of have to ask yourself whether or not it would be a good entry point to get in. So let's dive in deeper to the financials. So UAA is at 23.40, and the Class C shares are a little bit cheaper at $19.49. So basically, the difference between these shares is that the Class A shares give you voting rights. So every year, Under Armour is going to ask its investors to vote on approving certain things or voting somebody into the board of directors. And for each Class A share that you get, you would have the right to vote. But you wouldn't get that right with the Class C shares. So that's one reason why they are at a smaller cost. You don't really get that much voting power with the Class C shares. So right now I'm emphasizing more on the Class A shares. So as you can see, this stock has had huge growth since March of 2020. Since it was as low as $7 a share, it has gone up throughout 2020. It's been climbing. It's been in the teens for a good portion of 2020 until 2021, where we started to see it reach the 20s for the first time in years, considering that the stock price was at $48 5 years ago. So of course the company did experience some issues, some bankruptcy scares a few years ago, which does prompt the long-term decline that we're seeing from this stock. But we are seeing it making a comeback this past year. So as to whether it can reach the $40 level again, that's a good question. And that's probably more of a long-term outlook, depending on how healthy the Under Armour company is relative to how it's performing against its competitors, Nike and Adidas, which tend to have a much larger market share in the athletic wear industry. So looking at the financials, the revenue is good year after year with Under Armour, although 2020 has seen a bit of a dip as well as negative earnings. So that is something to be cautious about with this stock. And then you look at the quarterly, and it's been improving. It hasn't done so well in Q1 of 2020, but quarter after quarter you start to see that the revenue is increasing and the earnings is definitely increasing as well. So that's good to see. So analysts are saying that the stock is between a buy and a hold, especially because it's near the 52-week high. And then you see the price targets as high as $30 and as low as $7. So that's a pretty wide range. So diving deeper, looking at the balance sheet, they currently have $5 billion in assets and $3.3 billion in liabilities. So of course the assets are higher than the liabilities, which is a good thing. And then the income statement, they are currently experiencing a negative net income. So right now they're not as profitable as Nike and Adidas in terms of what they're bringing in, but you kind of have to ask yourself whether or not this company can recover and perform well in the long term, which would eventually lead to them being profitable. Now again, this is something that we see with a lot of growth companies. They'll be taking on debt, and they're not really performing as well as they should, but you just give it some time and just try to look at it every quarter to see how the company is performing. So at the moment, I do not have a position in this company, but I am keeping it on my watch list just in case I want to get in at a decent entry point. Ideally, I would like to see the stock at the $20 price or back in the teens, but we don't know that. It could very well go toward the 30s within the next few months. So at the moment, I'm just keeping this stock in my watch list. Now, I do want to talk about an option play that I am considering right now. Now, if you saw my previous video about options, I mainly specialize in selling options as opposed to buying them. So we're looking at CleanSpark, which is a stock that I talk about heavily on my channel. And it has recently dropped. It was at $29 and it is at $22 right now. So what I'm going to do is I'm looking at the April 16 expiration date. I'm going to sell a put. So I'm going to sell a put at the $20 strike price, meaning that I'm going to put a $2,000 of my own cash in collateral. And if CleanSpark is at $20 or below on April 16, that means that I will purchase 100 shares for $20. And I also get to keep $268 in premium, as you can see here. So you do need to have enough money to purchase 100 shares. So in this case, $20 times 100 is $2,000. So you will need to have $2,000 kept as collateral. So in case the stock price goes below $20, I get to purchase 100 shares for $20. If the stock price is above $20 on April 16, that means I get to keep the $268 in premium. So that I get to keep in my pocket, and I can use that money to buy more shares of CleanSpark or any other stock. So that's what I'm considering doing. But then again, I'm not a financial advisor, so please don't copy what I'm doing just because I'm talking about it. Do your own research when it comes to Under Armour stock and this potential option play. And if it works with you, I would consider giving it a shot. But this is what I'm doing personally, and this is not advice. This is Investor Shake checking out.